Alright, y'all. Today I'm going to be going over basically today's plays that I called out last night on Twitter and how they panned out. So first I'm going to go ahead and show you, where's it at? Alright, this is the tweet I tweeted out last night. I posted exactly what I was looking for. Right here is a chart of my strat setup. I was looking for a 2-1-2 bullish reversal. So we have a 2 down right here. Inside candle, which that's what a 1 bar is. Inside candle basically just means it stays between the high and the low of the previous day's candle, and we can usually expect volatility to come with this inside candle. Occasionally it can form a double inside candle, which is even more volatility to be expected, and they're really great for option plays as they can net some big gains. So I was definitely leaning more on the bullish side, but it's always nice about inside candles is that you can actually play them to the upside or the downside. So I posted a put trigger right here and a target. But the thing is, definitely looking more on the bullish side, as there was a little bit of a gap to fill right here. And there is only one kind of put target, which if this broke through our put trigger and broke underneath this target, it could have gotten real ugly. But you know, we kind of were in this downtrend, bound to pick up. You can see on the stoic indicator, the blue line was starting to cross above the orange, so you could kind of expect a little bit of a bounce right here. So right here at this level, 79.17 was basically our call entry, and these green lines are our targets. These targets basically just come from the highs of the previous day's candles. So I'm gonna go ahead and show you that. You can see we hit 2 out of 5 targets. We actually peaked at the second target. We couldn't break that, so you can see, you can think of that as some resistance right there. Let me show you a smaller time frame. Okay, so this is a Thinkorswim. One thing I like about using 2 different platforms to trade and chart is that it gives you different perspectives. I've noticed that a lot of times looking at it different ways, even if it's the exact same ticker, the same time frame, sometimes it's harder to notice patterns. So the current setup I have right now is small laptop, and it's got an HDMI to an ultra wide monitor. I actually like to look at most of my charts on the ultra wide monitor, but I do also will switch it over to my smaller screen because I've noticed a more compressed say daily chart is a lot easier to notice patterns. So that's definitely something important to notice. Or basically, if you see something that you wouldn't have normally thought of before, that can definitely save you money, whether it's, you know, you being biased on the bullish side, and then you look at it from a different perspective and you're like, oh, well then, you know, what about this right here? You know, you can definitely play it out that way. I always like to look at it from the bullish and the bearish perspective. But looking at the daily chart here on Roblox, what I had actually posted last night is that it was finding support on this 200 EMA right here. It actually closed above it, and it formed a green hammer. So I was definitely looking for a little bit of the upside on this one. I'm gonna go ahead and show you smaller time frame. All right, show you from market open to close. Here, 15-minute on the right. So the bottom right here, it's a little hard to tell with the 6-minute chart, but essentially we closed down, or we opened underneath this green line, which is our calls entry trigger. And right around here is basically when I got in at. Don't remember the premium off the top of my head, but this is our entry, and from here to this kind of like peak, you can see we're starting to get a lot of consolidation around this level, and we started breaking under 9 EMA and testing 20 EMA support, so that was kind of showing some weakness. So it would be ideal to take profits right around this level. At this first peak, it was approximately a 68% gain on those calls. And then you can see broke down right here. We had a fat red candle that closed underneath the 20 EMA, basically showing more downside to come. 3 continuation red candles down here, a little bit of consolidation on this 50 EMA right here, and then we broke down, and you can see we actually came all the way back down to our call trigger entry level. And the nice thing about the strat is a lot of times you could play the same thing more than once. So for example, this first run we got 68% run on that. Perfect. It's a great play. You know, you could have played puts down here, but it would be ideal to enter, you know, where your plan was, because there's no telling whether this would have really came all the way back to test this or not. If it was a strong bullish momentum, it could have only pulled back maybe right around to this 50 EMA, maybe broke underneath it a little bit, but not all the way down here. But basically, you see this fat red candle, and then this one wicked underneath it and then closed above it. This is a really nice candle to show kind of reversal. The bottom wick was a lot longer than the top, showing that bulls were more in control here. So you could have re-entered this play, and approximately, depending on what your entry was, from here to the second run, you could have made 168% profit. Now I'm gonna go ahead and talk about Facebook. Actually, I had posted about Facebook last night. I'm not really gonna go over it too much, just because it actually gapped down underneath our trigger, and you don't want to chase plays. You know, obviously it gapped down pretty big, so it was definitely leaning more on the bearish side, but we don't know what really kind of entry and targets to look for in this case. But I mean, you could have played it a little bit. It did throughout the day come here and test this level right here, which was our put trigger entry, and looking at this as a harsh rejection from that level, you could have entered puts and printed back downwards. Now I'm going to go ahead and look at NVDA. Let's pull up what I tweeted about NVDA last night. This is a setup I tweeted. It's actually very similar. I was looking for a gap fill, 212 bullish reversal, 2 down, long wicks right here, and it actually formed a hammer as well. So I was definitely looking for the upside, and something to note is that the high of this inside candle was pretty much the same high as the candle before. So if we broke this level, I was expecting lots of volatility, hence why I was kind of thinking it could fill this gap here. So again, posted call triggers and put triggers, a little bit of TA. You can see I posted some Fibonacci retracement levels. If you don't know what those are, I can also make a separate video for that. But essentially, you can get a low to a high, and these percentages will show up, and they are basically just certain percentage retracement levels, and other traders will also be using the same tool, or more than likely seeing the same thing you see. So that's essentially how TA works. A lot of people think TA isn't really kind of like useful, or it doesn't actually work, but there's psychology behind it and the reason why it works. So you can see we could not break above this 38% level, 214-ish. So a break above this level would definitely be nice to at least try and test 23%, even if it wasn't in today alone. You know, maybe the next couple days leading up would probably try and test that. But since we did bounce off this and caught support on this 50 EMA right here, it was likely that we could at least try and test the 9 EMA at 218-ish. And that's pretty much what ended up happening. Let me show you that. Okay, let's go to, actually, let me show you the daily first. All right. So here, green line again is the call trigger level, and you'll notice it's actually pretty much exactly lined up with this 38% again. So bounced off the 50 EMA, like I said, and you can see we filled the gap right here, tested and broke above this 9 EMA. We couldn't break the 23%, so the way I'm basically thinking about playing this tomorrow, I haven't looked at the options flow yet, but if it rejects this 23% level at a 220-ish, I could expect, especially if it breaks back under 9 EMA, another test back down to 38% Fibonacci level at around 214-ish. Let's look at 6 and 15 minute charts. Right around there and here. All right, opened up a fat red candle when we opened. Again, we're keeping an eye on this call trigger right here. So this big 3 outside candle actually closed above our call trigger, so this would have been a nice sign to enter calls. It never really kind of came back down. You can see on the 6 minute it actually stayed above this 9 EMA pretty much this whole ride up. So right around from here to, I want to say it was this first peak right around here or here, was about 142% profit on those calls. You can see we actually dipped down here, tested 50 EMA, bounced off strong, so that's basically showing that there's strong momentum on the bullish side. We were able to hold that support, and we went on to continue the day to actually test the 23% Fibonacci. We couldn't hold above that, but if you were to have held out from this, even if you, well, from right here where the call entry was to the peak was a max of 165%. But if you took profits, say right here on this first big red candle down, you know, you could have waited to re-enter. A good place to re-enter would have been seeing this strong bounce off the 50 EMA, and when it crossed above the 9 and the 20 EMA with momentum, you could have entered calls again there. Now let's look at PayPal. So I did tweet about this last night and I posted trigger levels, but I did not have enough time to actually like post the chart and everything, kind of how I did with Roblox, Facebook, and NVDA. I didn't have time to do options flow, but it actually ended up playing out pretty nicely. Let me pull it up. Well, first let me show you. So yeah, we have it was pretty similar to the other couple plays. I was looking for a 2-1-2 bullish reversal. It didn't pan out that way. It actually did trigger our puts level this morning. I did tweet that. I got stopped out of that around 10 to 15%. I want to say 10% because I cut early because it was real early in the market and I was expecting volatility, so I wanted to wait for a better entry. But once it bounced off this bottom level, this bottom candle of the inside, it actually broke above pretty strong. Let me show you that on a smaller time frame. Okay, Market open right here right around 8:30. You can see we had this huge break, and this is when it triggered. This solid red line was the puts trigger. It triggered there. I got in when it what's it called? This is a 6-minute chart. So on the 1 to 3 minute chart, it closed underneath that level. That's when I got in on puts. I got stopped out of that play. I was then hesitant. I was basically kind of letting it play out, see what would happen. It got to this 20 EMA level, 50 EMA level, and you see it rejected hard. And I wanted to enter puts in again on this, but I noticed that it immediately bounced upwards. So that's another thing, is even though this ended up not really going much in whether there was the bearish direction breaking the previous low or the bullish direction breaking the previous high, you could still have played it, because again, you treat these levels as support and resistance. So you can see this level held up great as support. We had this huge green candle right here on the 6-minute. So you could have it would have been more risky entering down here, but again, you always set your stop losses at around 10 to 15%, or it's up to you. I usually prefer 15. You can see I charted this dotted red line right here. You see all these wicks right here. It couldn't close. Not once did it close up above in this like 30-45 minutes right here. And so I was basically treating this as heavy resistance. Then we have this fat 2 up candle right here that not only closed above the line, but that's big momentum right there. So broke out above this resistance. So you could now treat this as a support. Wicked up high there, basically showing that the bears tried to take back control, but we caught support on the 9, 20, and 50 EMA. Also didn't exactly touch this, but you know, we had multiple indicators providing support for the bulls. Stayed above 9 EMA for a while, tested 50 EMA, wicked down, never closed underneath. We got a pop right there. We did get a close and a harsh wick almost back to this level. For the rest of the day, it was kind of more choppy, but let's see, from NVDA, the first peak, I'm sorry, not NVIDIA, PayPal, the first peak was around a 76% profit with a max of 162% profit. And I know I have, let me look at the 3-minute chart. I think that's where I saw it. Zoom in here. Come on, zoom in. I don't know why it's not zooming in right now. All right, so this is a 3-minute chart of what we were just looking at on PayPal. Again, you can kind of see how what I saw here and why I drew this wedge right here. You can see 1, 2, 3, 4, almost 4 points of test on this bottom trend line, and then we had this big break above. So you could have entered more risky here. This first pop would have been around 76%, I want to say, is what I wrote down. Or you could have waited for, which is a lot safer to do, after it broke out. A lot of times it will come back and test that previous resistance level around there. Didn't quite get there this time, but it did catch support on this 20 EMA. So on this close back above the 9 EMA, you could have thought to enter calls. The peak on PayPal was approximately 160%. So not all the time are you going to get that full 160%. A lot of the time, I don't even get that full percent. Depending on how many options that I own, I'll have a certain number of runners. But that also depends on the option premium, the expiry and all that. So essentially what I normally like to do is when I enter a play, I'll set a stop loss of negative 15%, and then I try and take profit at certain increments. Usually will take around 1/4% of my profit. Around 1/4 of my profit at 15%, and then I'll take another 1/4 of my profit at around 20 to 30%, depending on how strong the momentum is. And then my last half of profit, I'll usually let run. It kind of just depends on how strong the momentum is. If I see like a really nasty red candle, to be safe and lock in profits, I'll just sell that last half. But if I kind of think it's still going to keep going up, I'll sell another 1/4 of my profit and basically just let that last 1/4 run. And you can move up your stop loss. So say after you took your first half of profit, right? Maybe you only got 30%. You can move up your stop loss from a negative 15% to say 15%. So no matter what, you at least locked in 30% of half that initial cost, and then 15% from the second half. So no matter what, you locked in profit. It's a winning trade no matter what. You might not get the full percentage per se, but I mean, you can't complain about a winning trade. You know, it's definitely very important to keep up with your risk management and not just go for those really exponential plays, 200%, 300% plays. Those are always nice to hit, but if you don't have a runner, if you don't have already a bunch of your profit locked in, and if you're not moving up your stop loss, that can definitely come and bite you in the ass. It's happened to me before. You know, happens to every trader. Definitely something important to learn from. A lot of times you can be up big on profit, and you know, you let your emotions get to you. And that's a big thing about trading, is that you can't let your emotions take control of your actions and decisions. Otherwise, it can force you to make poor decisions. So, for example, it's happened to me before. Say I'm up a big percentage. Back then, I wasn't smart enough to lock in those percentages at certain increments and whatnot. And it basically turned from being a big winning play to either barely being a winning play or even sometimes being a losing play, basically just because I was just hard-headed and like, man, you know, I was just up big. You know, you kind of just are really biased at that point, thinking it'll just go back up, and just from that point on you get aggravated and you let your emotions take control, and that's when you really start losing big money. But it's pretty much what all I have to say for this video. Hopefully it was simple and straight to the point, and you learned something from whether it just being the strat or just kind of some simple technical analysis. I didn't really get too in-depth with the technical analysis just because I don't want to make this video even longer than it is, but I can definitely make more videos. So be sure to comment below, tell me what you liked and didn't like about the video, any critique or what you think I could do to make the video better. This is only the second video. I found a different software for my screen recording. Obviously it didn't want the watermark, and I'm going to be doing editing and stuff in the future, and a logo, and you know, the full YouTube experience. But I just wanted to kind of start posting some educational content. So like and subscribe if it helped you or if you learned anything, and I'll see y'all tomorrow.